Hey, this is Brant from TradeGuild.net. It's Saturday, the 24th of July 2010, and I want to do a video because a pretty big issue is coming up. I have two websites. Of course, you know TradeGuild.net. We have a lot of videos here on YouTube, and I have a member site that's connected with that, which is called Wolf on Wall Street. At Wolf on Wall Street, for my members, I said we're going to do a little experiment this earnings quarter, and I'm going to show you how manipulated the markets really are. In the past, I've seen all kinds of things from Federal Reserve policy statements or surprises to the employment numbers coming out or the oil inventories. Everything I've seen leaked through my indicator 3C, which you see on the screen here in yellow. And what this indicator does is kind of sniffs out institutional accumulation or distribution, whether they're buying or selling, through positive and negative divergences. So if the indicator's in line with price, then everything's fine and there's no signal. And if we get a negative divergence, we see distribution. If we get a positive divergence, we see accumulation or buying. So I said to them, we're going to do an experiment. We're going to take 3C and we are going to look at stocks that are posting earnings over the next few weeks. And we're going to say either, this is going to respond well to the earnings or it's not going to respond well to the earnings based on 3C. But it's going to be posted before the earnings actually come out. So as far as the actual stocks that we covered, I want to just give you an idea of how many and where we were at with them. So Bank of America, we got that one correct. There's a gap down of 9.16%. And so a lot of our members traded some of these, so they made some money in them. So Bank of America we got correct. McDonald's yesterday, we said down, and McDonald's was down. SBIB, we were correct on SBIB, up 10.4% on the day. So members made some good money on that one. Johnson & Johnson said down. We were correct on that. Harley Davidson, we were correct on that. It was up 13.6% on the day. GSK, correct on that. Wells Fargo, we were correct on that. They had a big gap up, about 6%. Apple, correct. Goldman Sachs, correct, with a big intraday move there. BIIB was one we got wrong. UA was wrong, one we got wrong. HAS, correct. BRO, Brown & Brown, correct. Citi, correct. JP Morgan, correct. And Delta Airlines, correct. And we made some good money on that one as well. So you can see way above the statistical 50-50 guess. We were just hitting all these correct, and it's because we could see divergences the day before or a couple of days before, or in some cases a week to a month before. We could see these divergences, and we made assumptions based on that. Now, it didn't tell us whether or not the stock was going to beat or come in on the shallow side. Like, for instance, McDonald's beat, but they still sold off. It just told us we're seeing distribution, we're seeing selling in these stocks before earnings. One thing that was really probably the biggest thing of the week, and probably one of the most important articles I've written, and if you get time, go to TradeGuild.net, and if you want to become a member, you can see it at Wolf on Wall Street in a lot more detail. Wednesday, after the market, the Fed had the Senate committee where Bernanke testified before the Senate. And I said this after the market. I said, while I know for sure that there's going to be stocks that are going to be up huge tomorrow, I'm finding it very difficult to find that obvious accumulation that makes for a good long call. And even more surprising, given today's events, which was the sell-off at the end of the day, I'm finding it hard to find negative divergences that are out of line with what the market is putting in general. 3C, this indicator that you see here tonight on the shorter time frame, shows a listless, almost lateral trend in so many stocks. It's something I'm not sure I've ever seen. At least I've never noticed it to this degree. What is my interpretation? Now here's where it kind of gets important. What is my interpretation of this? The same as how I described Ben Bernanke's statement about the market, in quotes, unusually uncertain prospects sounds shell-shocked. I think the market was looking for something. Scratch that. Let me restate. I think the market was expecting something particular to flow from Mr. Bernanke's lips. When that didn't happen, I believe the market's big players almost felt a sense of betrayal. They had gone through the trouble of accumulating a position, and we had mentioned that there was going to be a bounce. 2 days before the bounce started, we could see that they had accumulated a position, and I said it was going to take probably about 2 days of rally to distribute it. I said they had gone through the trouble of accumulating a position, and as I mentioned before, the rally ever took place, and now they are faced with the position that they don't know what to do with. The words that rang around the financial globe today, unusually uncertain prospects, did damage, but as a reader pointed out to me, CNBC had read those words before Bernanke had even opened his lips. I do not doubt that Wall Street would have been aware of that statement at some point today. Now, if we look at 3C, and you have to go back to Trade Guild, the day of this post, go ahead and read it. You can see all the indicators because some of them are on short-term time frames, and I can't bring them back this far. But if we look at 3C, basically we have an uptrend here, and we have confirmation. We're making higher highs in 3C over here. On the gap up in the morning, right, we get a negative divergence, and that gap immediately sells off. And we see 3C moving down throughout the rest of the day. If you look at price over here, okay, price over here versus price over here, and you look at where 3C is way up here versus where 3C is down here, 3C had moved into a leading divergence right before the words came out on CNBC. And at that point, we saw retail selling because we saw big volume, and big volume distribution is not what you see when you see institutional selling. So we saw institutional selling all through the morning, knowing that they knew something that the rest of us didn't know, and that the market wasn't going to respond very well to that. And as we see, the market didn't respond very well to that. So institutional money sold all throughout this period here of the day. And you can see that in 3C moving down. And as I said, if you go to tradeguild.net, you'll see the post, the article, which has a lot of charts that have the intraday time frames that will show you in real detail this happening and as it happened. So I want you to understand something. The markets are not free and open markets. They're manipulated markets. I do believe it goes from the White House to the Federal Reserve, the Treasury, and of course straight to Wall Street. If you don't understand this about the markets, and if you don't come to terms with this about the markets, you're not going to do well in the markets. That's just plain and simple fact. We're lucky we have this indicator 3C because it is predictive in a lot of ways. It tells us where there's accumulation. Like I said, 2 days before the rally even began, we saw the accumulation, and I posted that to my member site, Wolf on Wall Street. Get ready, we're going to have a rally here, and I expect it to last 2 days. Well, we've got 2 days of rally. We had one big day up, a big day down, and then a nice day up again. And what we were expecting was a bear trap to be formed above 110 on the SPY, and we got that yesterday. I believe that's a bull trap very strong. You got to be very careful trading next week. Go to tradeguild.net, read these articles. One huge trade that we had was AMPL. It was a market call on July 11th, said buy the stock, and it's up almost 33% since July 11th. So we have a lot of calls like that. You saw how many calls were correct on the earnings versus how many were wrong. 2 were wrong, and more than a dozen were correct. The indicator works. There's definitely manipulation in the market, and we can see it. So again, this is Brant from TradeGuild.net and Wolf on Wall Street. Have a great weekend, and don't forget to go and check out these articles. It's going to help you a lot in trading.